Hello and welcome to the Investing Master Series. My name is James Boyd. We welcome all of you here today. We got Scott Thompson also with us in the chat. We also, and many of you know him, he teaches getting started with stock investing. So Scott, if you wouldn't mind, go ahead and actually post that in the chat as well. If some of you are brand new to this is not a one-off class. We meet every week, and I'm going to show you some links that you're going to definitely want be made aware of. Some of you are returning users. We welcome you again. We got Bill with us, Riceberg, Josh Pink, Will, Grace, and many others. Welcome to all. Great thing about meeting together is we meet online, right? And also we have some in-person events where you can meet some of the local investors there as well. And I'll show you some of those links in just a moment. Now, just real quick, when we talk about getting Investing Master Series, we talk about stocks, we talk about options, we talk more about basic options, we talk about strategies maybe to have leverage or let's say protection, okay, and income strategies, and obviously we would talk about stocks, okay, strategies like covered calls, cash secured puts, verticals, and so on. Now, also remember that you could actually follow me on X. All of us coaches are on X. There's my handle at James Boyd CS. I'll show that in just a moment. Now, just real quick as we get started, I want to give us a quick reminder that we will talk about stocks, but when we do bring up options examples, remember that options carry a high level of risk and are not suitable for all investors. When we talk about the information, it's provided for general informational purposes only. It's not an individualized recommendation, it's an example. So you get to choose what you want to do. Now, also remember when we talk about examples, we will do those on the Paper Money software application known as the Thinkorswim desktop. Okay, and then we call it the software version. So check that out. We'll be working off that. Also remember that when we talk about investing, it involves risk, including loss of principal, and also remember past performance of a trend or prior trades. There's no guarantee of future results. Everything is independent. Now, also when we talk about examples, if we bring up short options, those can be assigned at any time up to expiration, regardless of the in the money amount. We will bring up an example of cash secured put here today, and I'll kind of emphasize that. Now, also, real quick, I want to kind of talk about just real quick some of the topics that I want to discuss that I think are pertinent is buy stops and conditional orders. Think of a buy stop like a stock order to say buy the stock if it gets to this price or higher. I think when you look at many charts, that's probably a topic that we want to talk about. If we set a conditional order, that's probably going to be an option trade that's going to be, the entry could be conditional upon the stock going up to a certain price and try to get in. So we're going to talk about from a stock perspective, buy stop and a conditional order, because there's some things that are setting up for potential bounces or breakouts. Second, I want to take a look at the Apple trade. I just want to quickly review the stop on that, or can we move up the stop? Third thing I want to do is I want to talk about adding to positions. You've ever had a position that goes in your direction and you say, James, I want to add to the position. I got one that I want to practice that on here today. And the last thing I want to kind of really focus on is looking for some opportunities to do some cash secured puts. And we'll talk about that strategy. Now, first off, let's go just real quick to show this. So first off, want to make sure you're aware of, we are on YouTube. So this is being, we're broadcasting here. But the biggest thing is if you went to youtube.com and you typed in, let's say, Trader Talks Schwab Coaching Webcast right in the search bar, you're going to see that if you go to that page, right in the middle, if you have not subscribed yet, you can do so for free. Now, the biggest actually thing is when you subscribe for free, you're going to see the upcoming live streams, classes that we have throughout the day, and also going forward. You're going to also see bite-sized content that are just kind of quick sessions, couple minutes long, just 10 minutes or less. And you're going to also see other content below as well. Now, the one thing I want to kind of make mention, if you said, well, James, I noticed that there's a playlist right there. Yes, I'll show that. And I also want to make sure if you said, James, is there any way I could search on this page to actually see certain content that I'm wanting to know about? Make sure that you click on that. So if you said, I want to learn about covered calls, I want to learn about cash secured puts, you click on that, search for it, and it's going to go through anything that's on our page right on YouTube. So make sure you're aware of that. Now, as far as this class, if you bookmark this class, or as you do that, just go to click to the favorites right there. Then that way it saves it in your favorites. This is like kind of watching your favorite TV. You have a favorite TV show. You say, okay, record those shows when you're not there, and you could go back and review those. So I just want to kind of give you a sense of what we covered in the past couple of weeks, and there you can see it on the right-hand side. Now let's talk about, so I just want to make sure you're aware of those resources. Now, the biggest actually thing is let's kind of talk about the market in general here, okay? Now, this chart, and I'm going to share these charts with you, okay? The biggest thing is when we look at this, what we've been dealing with is kind of a pretty strong push to the upside, which, by the way, is not a bad thing. I don't know about you, but I'd rather have something besides coal in my stocking. Now, if we take a look at this, you're going to see that the movement started with, these are two different moving averages, and this one is the 10 whole moving average. Okay, it's close to the current price. You actually have the 20 period moving average, which lags, hence 20, okay? And you kind of had a classic crossover. Now, whenever the market actually pulls back like that, sometimes as technicians, we don't believe it because the market's been pulling back, but it was believable, okay? It's had a pretty big push. And the one thing that we would say right here is we've had a pull, and the pull is just where the price goes up, and it probably goes up for a period of 5 to 7 days. Now, so far, if we've been waiting for like red candles on the chart, we haven't seen those yet, okay? Is that a bad thing? Not necessarily. If you don't get any red candles, it's kind of like a run up in the price and a little flat. We call it a bull flat, meaning the price goes sideways. It's not really actually pulling back. If it doesn't really fall down from the recent high, which we just had in the last 2-3 trading days, it's probably telling us that there's more buyers than sellers. If there are sellers, there's not enough to really push it down, at least so far. And it might try to go back up and touch the prior top there, touch the prior top there. Now, remember, the SPX also tells us something about the sectors in general. It's probably more sectors than not that are actually going up, okay? Not all sectors going to be equal. But the biggest thing is we're seeing a little bullish push in the S&P 500. Now, when you also pull up the Dow Jones itself, we'll take a look at a couple of these. You're going to see that we had a little run to the upside. We had 1 day down, hence a red candle. And you're going to see that after one down day, the red candle from yesterday, you're going to see that so far, we're trying to push back up again. Now, remember, the shallower the pullback is in terms of percentage, or the shorter duration of time it is, the stronger likelihood that we make a higher low and try to go higher. So the Dow Jones, not that bad, okay? You're also going to see that I want to take a quick peek at the Russell. If you look at the Russell, it's kind of formed a very unusual like V pattern where you have the sell-off and the run-up in the price and the pullback, okay? Now, that is your classic V pattern. And this move off the bottom was a very strong move for the small caps. Now, I don't want you to think that we're just looking at daily charts. I think what the investor needs to probably consider is looking at a 3-year weekly. And if you look at the 3-year weekly really of the Russell, you know, we've had on the weekly chart that 10-week moving average went green again. The moving averages is trying to narrow in on each other. They're trying to get across. But overall, this is your classic almost like a old resistance turning into, let's say, new support. Now, that's what I mean by the old resistance. This trying to turn into the new support area. I think if there's an area probably going into the year end where investors might be a little light, it's probably the small caps. If those small caps actually continue to hold 2,400, the things we've been talking about so far, you could probably get a bounce and a push to the upside. Now, that doesn't mean that there's no position sizing or there's no stops. Of course there is. But the biggest thing is kind of some of the indication that we're seeing. It's been pretty strong. The key word is so far. Now, the one thing I would just quickly, NASDAQ, if I go look at the daily chart of this, if you look at the daily chart on that, there's your diagonal line, which was created from lower highs. And there's, you got above the diagonal line. You not only got above the diagonal line, but you also got above the horizontal area of resistance. How many of you are bullish investors? If you are bullish investors, you like to see we got all indexes, not one or two. You got all of them kind of in that green shaded condition. The green shading is caused by the shorter term moving average, the 10, above the 20. Okay. Now, let me share this chart with you for just a second. If I share this chart with you, I'll show you how to put it on your chart. I sent that to you in the chat right there. All we need to do is just go to the very top right, setup. We're now going to go to where it says open shared item. And if we click on open shared item right there, so setup, it's not too bad, right? Then go to open shared item, not too bad. And then just go, well, Control V if you're on a PC and a Command V if you're on, just paste it, right? And we're going to now go preview and then just import that. So it's just importing it on your side. So your chart is going to look similar, okay? And we could see that there, okay? Now, just want to show you how to put that on. Now, I want to kind of talk about just real quick. If I were to ask you a question, like, what sectors are you watching? What sectors are you watching? Now, if we come to this on the left-hand side, you're going to also see that we have sectors right there. Now, I include SOX, which is the semiconductor industry group. I do put that in the sectors, okay? Trade's almost like a sector. And you're going to see that we have semiconductors, which has been having a pretty big push to the upside. It's at that sensitive area where it broke down before, okay? You're going to see that obviously we're talking about the IXT, the technology. We already said that, right? We got SOX, we got NASDAQ, we already said that. But the one that we're kind of keeping an eye on here a little bit is the DJT, the transports. Now, why are we bringing that up? Well, lo and behold, okay, we saw the price. You have prior highs right around 16,482. We touched that uno, dos, tres, and now you're seeing that we get a little push to the upside, old resistance becoming new potential support. I want to talk about that area. What areas in the transportation space are we seeing a push in? Now, you could also think of it, if we say transports, we are also saying industrials, okay? When you look at industrials, the IXI, if you pull that up, it doesn't look like it's transports. Now, that does not mean that there's not any industrial stocks going up, because that's not true. But you're going to see that if we look at them, usually if you see there's some overlap between transports and industrials. Now, what I want to do just real quick is I want to bring up a stock, and I want to kind of just look at just real quick, go to the market watch. Let's go to visualize for just a second before we look to do our first trade example. We're going to go to market watch. We're going to go to visualize. Now, when we do this, it's going to bring up, and I highlighted the Dow Jones. If we were to look at this, the stocks that have the lighter color green box, those are the ones that are up the most. Boeing, okay? Now, the ones that are darker color green, they're still good. They're just not at the same percentage or as strong as Boeing. Boeing is up 8.79% itself. You're going to see that stocks like Amazon, Apple, NVIDIA, Microsoft, those are darker green. They're up. But the biggest actually thing is why the box is different size. It's based on the market cap, okay? If we go down to NASDAQ, you're going to see that the same thing, NVIDIA, Microsoft, Apple, Amazon. The one thing you'll kind of notice different on this is you are seeing Palantir come back up. You're seeing App actually come back up. Shop we've actually talked about. A couple of those there. When we go down to, let's say, the S&P 100, you're still seeing the big ones lead. And the 500, what you're going to see is it's still the big ones leading. The reason why I bring this out is a lot of times we like to kind of see those bigger names, which have bigger stock volumes and option volumes. Are they leading? And we're seeing that, okay? Now, the biggest actually thing is, let's kind of talk about this first example. Now, when we pull up, let's go down for just a second on the bottom left-hand side. And if you look down on this bottom left-hand side, there's your Dow Jones. Now, if you have a watch list on the left-hand side, we can just click on that little drop-down right there, okay? That drop-down, we're going to go to where it says public, and we're going to go right to where it says Dow Jones Industrial Average. That's all it is. We all have the same list. Now, when you pull up this list, we're just ranked by percentage change. Now, one of the things we're going to talk about here today is buy stop orders and conditional orders. Now, I want to go down to one example, Caterpillar. Now, if we were to look at Caterpillar, if I were to ask you a question, what is the trend of Caterpillar? What would you say? And the other thing is we would actually say with this is there a shorter term setup, an entry, in the upward trend of Caterpillar? Okay. Now, as I'm getting an answer back for just a moment, I'm going to kind of just draw some lines for just a second. Now, we all know that the market pulled back about 2 weeks ago, and it pulled back. Most of the lower highs where we dropped down, we came back up. We dropped down, we came back up. We dropped down, and we actually came back up. Most of those touches, okay, missed one, kind of came up to about where that diagonal line is. So far, we've been able to stay above that diagonal line. I'm going to kind of put a horizontal line right at that breakout area, right around 563. Now, one of the things we actually talk about is what's called close above the high of the low day. And that just means we're looking for a stock that's above a moving average or both. And we're looking to see what is the lowest, most recent red candle. And what you're now going to notice is we only had one red candle. Let me circle that. Now, if the investor, that Scott always does, he's asked this question for probably 20 years, okay? And Scott always asks a good question. Scott is who's in the chat, ST, the initials. You're going to see that Scott will always ask a question. What would the investor need to see to consider a bullish entry? Well, a lot of investors say, look, I'm looking for that stock to get above yesterday's high, because if we do that, we could actually be getting to the end of that shorter term pullback and maybe where we're starting to bounce to the upside. Now, does that guarantee if the investor gets in that it's going to go up higher? Of course not. We're talking about stock investing. There's nothing guaranteed, okay? Now, the biggest thing is, what is the high of yesterday? The high of yesterday is at 575.59. Now, let's say the investor said, James, if we get to 576, I want to get in. Well, how would the investor do that? Well, what we're going to do is in the paper money account, let's go here. Now, by the way, this is why you would want to join us. Join us weekly. This is not a one-off class. Join us each week to practice what we're talking about and then setting up individual trades that actually are creating a portfolio. Now, one thing I'm going to do is right on this paper money account, I'm going to right-click on the chart. When we right-click on the chart, we get a menu. When we right-click on the chart, we're going to go down to where it says Buy Custom, and we're going to do with OCO Bracket. All that means is we're going to have a buy order, a target if it goes up to that price or higher, or if it doesn't go to the target, then if it goes down, sell it if it goes to this price or lower. So we're going to click on that. There it is. Now, what we're going to do in this case is we're going to imagine when we talk about, well, how many shares are we going to do? Let's say we said for this example, 25 shares of stock. If we did 25 shares of stock, that's the number of shares. Right above that, you're going to see that there's a little icon right there, and it snaps that if we buy 25 shares, then 2 rows below are going to be 25 too. Okay, makes sense. Now, what I want to first do is let's kind of talk about the stop. We're going to say, look, if we go lower than the moving average, let's say 564, sell the stock if it gets to that price or less. Okay, now we got to ask ourselves, well, how much farther or less? We're going to take the 564.69, okay, where the moving average is, I'm pointing at it, times 0.98. Now, 0.98 is just taking 2% below the moving average. Now, let's be crystal clear. This is going to be a stop order. And the stop is saying sell the stock if it goes to that price or less. But you got to remember, a stop is a market order. What does that mean? A stop doesn't guarantee that it's going to sell out exactly just that. It's the trigger to sell, okay? Now, what we're going to do is we're going to type in that number. Where do we get the number again? It's the moving average less 2%, 553.39. Type in that number, 553.39, right in the stop, day to GTC. Now, in terms of like a target, well, if we go back and look at this chart for just a second, we have a prior high, which is about 583. And some of us like to use Fibonacci, okay? Now, if we take a look at this, I'm going to go back. Now, James, when you see a chart, what are you looking to actually use Fibonacci? Number one is I'm looking for a prior high. okay? And then where we had a pullback. That's classic Fibonacci material. Second, if we've actually had a pull, like we actually saw in the Russell 2000, that would be a classic time to use a Fibonacci. I see that we have a prior high. I see that we've actually pulled back. And I'm going to draw the line down to where we pulled back to. Now, we're drawing the line where we pull back to in terms of the bodies of the candles, where we probably had more touches. Now, I'm even going to kind of take it a little bit closer to where we touched that one, this one, that one, that one. Classic support, right? We're not looking for extremes, wicks. We're looking for bodies. More touches. Now, if we were to look to the upside, we might say, let's say a 161 extension would be 610. And a secondary area might be, let's say, 625. Now, you say, James, to me, that 625 seems like pie in the sky. I'm going to set that target right at about 609. No, wait. Why not 610? Well, because that's a target. We don't know if it's going to go up to there. We're just going to say, look, if you can get anywhere in that area, sell it, okay? So what we're trying to do is buy the stock at that price, okay? But what we need to actually do is whenever we put on this order, we're going to do a buy stop, and I'm going to put a price of 576. Remember, this is the point of this. We're saying, look, if we get at or above this price. Now, how many of you, besides me and Scott, put your hand up. Don't put your hand. How many of you have missed a bullish entry before? I think we all have, okay? Now, think about this. If we could practice and do one thing, geez, maybe if we wouldn't have to feel like we have to sit in front of the computer, I wonder if I could actually just use order types. So this is saying, look, buy the stock if it gets to this price or higher. Now, some of you, when you say that, well, James, I don't like that. I don't know. This is like writing a check. And buy whatever at this price or higher. I don't know what it's going to be cashed for. Well, if you don't like that, we could try to fix that. And we could just go to buy stop limit. So we're saying, look, buy the stock if it goes up to this price or higher, but do not buy it any higher than 577. So the cap of what it's able to buy the stock for is 577. I'm going to tell you right now, a lot of people are like, well, I'll just watch the market. As soon as I see the entries, then I'll get in. But the problem is then you're kind of in that peak state of emotion. Here you're kind of using your strategy. What are you looking for to consider a bullish entry? If you said, I'm looking for the stock to get above yesterday's high by maybe about a quarter or 50 cents or 1%, maybe about 576. This right here is the cap. How comfortable are you willing to buy above that price? What is the ceiling price? So it's allowed to actually buy in between 576 and 577, okay? Got a target, and there's the stop. Now, the stop we already talked about, okay? In terms of how that works, we're going to go confirm and send. Is this a stock trade or an option trade? It's a stock trade, okay? There's no expiration. There's no strike. Stock trade, okay? Now what I'm going to do is we're going to go ahead and send that order. Now, this order is going to, and I'll fix that. This order is going to be in the IRA account, just FYI. And now what I want to do is I want to go back to one other example. So this was a buy stop order. If you are uncomfortable with setting a buy stop order, practice a buy stop limit. Same idea, it just caps the price. Now I want to go back to just real quick the Apple stock for just a moment. And I want to look at this for just real quick, okay? Now when I looked at this chart this morning, the reason why this came across my mind is it came back to my mind because in the paper money account, there's shares of stock. Now, we talked about Apple being a potential bullish breakout trade. Let's go to the chart. And if we go back to that chart for just a moment, what you're going to see is on this chart, the most recent entries, okay, let's use the technical analysis toolbox here, is the two moving averages. They both went green. That could be an entry setup. The crossover itself can be an entry setup. That's another entry setup. The close above the high of the low day, that green dot, that is showing a bullish bounce. So there was actually 3 different entry setups, all flashing the same signs. And then if we go back and look at, let's say, the last couple of days, right on 11:25, we started seeing the stock hitting a brand new high. Now, let's go back to this chart for just a second. And the one chart I want to look at for just a moment, when I say that, we talk about these lines, and let me kind of show this for some of you that are not aware of this. A lot of times people will say comments like, I didn't see the breakout. The thing we got to remember is with breakouts, what duration of time are you looking for a breakout? Now, some of us are trading different size accounts. There's different purposes for those accounts. This might be a trading account. Someone else is doing more investing, intermediate, long-term. So these lines, which I'll share with you, that orange line is a 10-day high. It's plotting the 10-day high over time. That's the orange line. The blue line is going to be a 20-day high, okay? 1 month. And when you talk about that orange line, it's really a 2-week high, hence 10 days. And that kind of grayish line, that's your 55-day high. That is kind of more your classic intermediate investor, weeks to months, okay? Now, what you're now going to notice is when you go over here to the right-hand side, over the last couple of days, all those 3 durations of time, they're all on top of each other. Why? Because it's a 10-day high. Why? Because it's a 20-day high. Why? Because it's a 55-day high. Now, can you have all types of investors, shorter-term type of investors, maybe days to weeks? Could they be getting in? Sure. Could those investors that invest weeks to months, could they be getting in? Sure. Could those intermediate to longer term investors, those investing from months to quarters to years, could they be getting in? Sure. They could all be plowing in there. Now, I got to ask Lisa just on the spot. When I saw Apple go up today to 287 and change, it made me wonder if Lisa, if she is still a Samsung user, if she has finally capitulated and said, look, forget this Samsung phone. I'm finally getting a superior product. I'm joking with Lisa, but inquiring minds want to know. Because if Lisa actually is buying an Apple phone, someone's going to have to call the top. I'm just joking with Lisa. Hopefully she's getting a chuckle. I know I got a chuckle. Now, here's the deal. On this Apple trade, what you're going to notice is our target is really 295. Okay? That's the target there. And my question that I want to kind of bring up is, could we move the stop yet? Okay? Now, what I want to do is, we know that the lines above, those are the highs. The purpose of those tools is to help us recognize the breakout. And the breakout, depending upon what time frame that you like to look at. Okay? So if you said, James, I'm shorter term, then you're going to probably use that orange color line. It's going to get us in earlier. Okay? If you say, James, I want more confirmation, you're probably going to want to look at the blue line and so on. But what I want to look at is just real quick is I want to kind of now take a look at this is, can we move the stop up? Okay? Now this is a part of trading and investing. It's not just getting in, getting in, getting in. So on the bottom, this is just the opposite of what we talked about. This white line is really looking at the 8-day low. What it's doing is it's plotting going back 8 trading days. And it's just saying, where is that point over time, that highest point of the last 8 days? And it plots that, okay? So when you see the white line going up, it's saying over the last 8 days, the low over those last 8 days has increased. So if that line is going up over time, it's telling the investor you could consider raising up the stop. Why would you use the 8-day? Because you're probably shorter term. If you're using something like that red line, that is your 10-day low. It's getting a little bit more slack. Same idea, going back the last 10 days, plotting for us over time. Where is that day's low? And if that red line is increasing over time, the investor could try to move their stop up over time. The yellow line, is going to be that 20-day low, more slack. It's probably that intermediate to longer term investor. They're saying, look, I don't want to get out on these little pullbacks like this. They're trying to ride those longer term trends. Now, my point in bringing this up is We do not have the move to the upside has been a beautiful move, but we don't have something. There hasn't been any consolidation that allows these lines, all three lines right now, they're on top of each other. Where's the stop now? Well, the stop right now is sitting right at about 262 and change. Do not click on the X. You click on the X, it's going to cancel the stop. All we're going to do right here is we're going to click on to the left of that X and just left click and drag the stop up. If we left click and drag the stop up, what we're doing in this case is we're just moving up the stop. Now, we could never say language like, oh, we locked in the profits. You didn't lock in anything because we don't know what it could be sold for, okay? This is just the trigger to sell if the stock goes to 265.32 or lower. So that's kind of the bad part about stop. It doesn't lock us in. That's buying a put locks you in, the right to sell at a strike price for a certain length of time. The stop is a trigger to sell. We're now going to go ahead and send the order. So that's what I want to kind of bring up on this. Now, over the next couple of days, Wednesday, Thursday, Friday, definitely going to be really watching to see if we can't move up that stop on Apple as this tries to consolidate a little bit more. Now, if you said, James, I actually don't have these charts. I would like to get these for Christmas. Call 1-800-JB. I'm just joking, okay? No, there's no 1-800 number. Now, the biggest actually thing is, let me share these charts with you. If I go to where it says share grid, okay, and I'm going to do this on my side, let me share this with you. I'm going to post this in the chat, okay? Now, all we got to do right here is I'm going to go to where it says setup. And after we do this, we're going to talk about some new trades, and we're going to talk about some cash secured puts, which is really trying to buy the stock, but using options to try to buy the stock. We're going to go to the very top right, go to setup, open shared item. Now, if you're watching this on recording, I will post these links in the description of this video. Go to setup, open shared item, and I'm going to copy and paste. So that's not too bad, okay? Go to setup, open shared item, copy and paste, not too bad. What do we do now? We'll preview, click it, and then just say import it. Now, what is it going to import? It's going to import these charts we actually have. Think of this like a toolbox, okay? Some of these charts, we kind of just want to have more of a basic version of charts. Other type of charts, we like to look for maybe breakouts and so on. If I maximize this chart now, well, you're now going to see these charts, these 6 charts. How do we bring them up individually? Now, everyone listen, okay? Right at the very top, you're going to see those 3 lines. You see those 3 lines right there? If you click on those 3 lines, okay, on any of the boxes, it's going to say maximize sell. That's not too bad. You can do it on any of them. If we maximize the sell, what it's going to do is it's going to pull up the first chart. Now, what you're now going to see is on the right-hand side, there's a back arrow and there's a forward arrow. What do you think the forward arrow does? It goes to the next chart, okay? So this chart is kind of your more classic chart, okay? The second chart is really looking at what we talked about before. It's really looking at the same chart as we had before, but showing the breakout lines. That third chart that we actually have here is that second chart, but just visually has where those stops could be by plotting the day's lows over time. That fourth chart is only going to be the day's lows over time. The fifth chart is going to be what we talked about yesterday. And that is really showing us the different types of trends that we're seeing on the chart. And you're going to notice that the color of the candles are linked to the type of trend that it is. That's a class we actually did from yesterday, okay? And this next chart is going to be the same, but it's going to, well, actually, excuse me, it's not the same. It's going to really show us, the question that gets asked a lot of times is, well, is the stock too high? This is really showing a moving average envelope and kind of really talking about or showing how high are we off the moving averages, okay? So that's kind of some of the breakdown of those charts. Let's go back to that first chart. So these are some charts that we like to actually use. And what I want to do is I want to go back to the example of Delta. So one of the topics we want to kind of bring up here is adding to positions. Well, what you're going to notice is we have a position in Delta, and you can see that. We got a target price, there's a limit order, we have a stop price right there. Well, let's say the investor said, James, my stock is going up, and I would like to really, for example, I'd like to sell a put on this too. The stock's kind of going up in my favor so far. Could I try to sell a put on top of this, on top of the shares? Have you ever tried to do that before? Now, I'm sure you're not the only one. Now, what we're going to do is let's go to the trade tab. The trade tab is what it sounds like. We're going to do a trade. Trade doesn't mean short term per se. It could be we're looking to do an investment. If we go to the trade tab, that second tab in, we got Delta right there. Check. Stock information on the top. Check. Shares that we actually have in the paper money account. There it is down below. And now what we're going to do is we're going to go down below the stock information and we're going to go down to the option information down below. Now, what we're going to do is we're going to go down to the January expiration. The ones that are in that white color, those are monthly options. Yellow, as it stated, weekly options. We're going to go down to the 16th of January. I can't even believe I'm saying that here, okay? Now, this is the 16th of January, 2026. We have 45 days to expiration. We got calls on the left, puts on the right. Now, some of you like to buy the stocks at a set price. Well, when we sell a put, example given, like this 62.50, if we sell the put, that means that the investor is okay with buying the shares at 62.5. That agreement is not for free, you're probably thinking. The investor says, look, if I'm going to agree to buy the shares from now to expiration, I want some upfront premium. Now, if you were to ever add up the number of times you said, I like to buy the stock in a pullback, well, this is trying to buy the stock in a pullback or trying to buy the stock, period. Now, if the investor said, James, I am more bullish on the stock, they might sell a strike closer to the current price of the stock. If the investor said, James, I would really like this to have lesser chance of buying the shares of the stock at the strike price and just having a greater chance of actually collecting the premium and or income, well, they'd probably sell to 60. So if the investor said, James, I'm more optimistic on the stock, and I think I don't mind to own the shares at the strike price, how do you sell the put? On the bid column, we're just going to go down to that 62.5. Now, if I click on that 62.5, the bid price, click on the bid price, it now creates a sell order by itself. Now, when we sell the put, that's the obligation, okay, to buy the shares at 62.5. Now, wait, if we did one contract and this was 62.5, this would be $6,250, okay? Think about what the obligation would be. And now what you're going to notice is if we're trying to get a little bit more in between the bid and ask, that premium we're trying to get is about $286. Now, if we go to where it says confirm and send, it gives us some of the information, such as we have the obligation to buy the shares from now until expiration at 62.5. We're collecting the premium of $286. We haven't made it yet. We collect it. And we now get the break even. This is the break even where the stock would need to be at expiration to be at break even. Anything above that means that the trade is profitable. Anything below that price, trade is losing. Okay? Max profit is going to be the premium itself. And you're going to notice that the max loss, that's going to tell us that if the stock went all the way to zero. So when you take a look at that, you're always going to say, wow, I'd never do this trade because the max loss is so much bigger, but that max loss is saying the stock goes to zero. Could happen, not likely, could, okay? And you're going to notice that there's a commission there. The commission is 65 cents per contract, and we're going to see that net credit there. Now what I'm going to go ahead and actually do is send that order. Now this right here is your classic cash secured put trade, okay? Now, what we're doing is we have a stock trade on it already. But what we're trying to do is if you have a stock trade and you sell a put which is bullish, you're trying to kind of increase that directional sensitivity. So if the stock goes up $1, It's not just 100 shares on the stock, it's 100 shares plus the delta on the option, okay? So that's what I want to kind of focus on a little bit. Second trade I want to just kind of mention real quick is Love. Now, Love, we also have that a paper trade on that. We can see that. We got a target price. We got a stop. I'm going to show this one as well from a different point of view, from the standpoint of like, what if the investor said, look, I want to have a lesser chance of buying the shares and a greater chance of keeping the premium? Well, let's go back to this. Let's go to the trade tab. How do you learn something? You practice. If the investor said, you know what, James, I want to sell, we're going to go to the 16th January again. We're trying to get 20 to 50 days to expiration. And what we're trying to do in this last option example, we're going to try to sell the 32.5, okay? Now, if we sell the 32.5, it's going to be, we have a bid of 77 cents or $77 or 83 cents. We're probably not going to get the 83. If we sold in between that, it's probably going to be right around probably about 80 cents. If we said, well, what is that? I call it option yield. If we said, well, what is 80 cents or $80 on a stock that's at $35? It's about 2.5%. Many investors like to know that that's above a certain percentage to consider doing the trade. Now, liquidity-wise, it's been pretty active here today. Volume so far on that 32.5 is 2,500 contracts. How do we sell it? We're going to click on that 77 cents. We're going to move the price to about 80 cents. And what we're going to do is we're going to practice one more here. We're going to sell it. And remember, this is the obligation to buy the shares to the strike price from now until expiration. From now. So we could be the buy the shares today, tomorrow. It's not just at expiration. Always remember that. Now, if I do confirm and send, we get the break-even information, max profit, max loss, and so on. Now, you got to remember, it's not about the dollar amount per se. Okay, you got to look at what the percentage is. This was 2.5% of the stock price, meaning if we got 80 cents on a $35 stock, what percentage is that? It was about 2.5%. What we're going to go ahead and do is send the order and send it, and I'll fix that trade. Now, the biggest actually thing is, let's kind of go back to some other questions that kind of happened. So first off, if you said, well, number one is, let's kind of recap this, where can we actually get other classes, other topics, okay? So first off, if you went to YouTube, remember, our channel on YouTube called Trader Talks Schwab Coaching Webcast. That's number one. If you are on your mobile device, phone, iPad, whatever you got, which I'm always on my mobile device, okay? Probably using YouTube a lot. Our classes are streamed on YouTube. Now, the second one I just want to kind of make sure you're aware of is if you went to Schwab, okay, .com. If you went to Schwab.com, which you've obviously been there before, you're going to see a tab where it says Learn. You don't even have to log in yet. Go to Learn. If you go to where it says Learn and you go to the right-hand side where it says Schwab Coaching, you're now going to see a place that you want to make sure you're aware of. If you click on Schwab Coaching right there, so go to Learn, Schwab Coaching. And on this page, what you're now going to notice is the overview, live webcasts, and virtual workshops. Now make sure, let me send this out, that you see this. This page right here, if you scroll down, it's going to show the calendar, here we are on December 2nd, of the classes that are streaming on YouTube. They're free if you're a Schwab client. And now what you're going to notice is the next class is Cameron's class, Getting Started with Stock Options. Getting Started with Options, excuse me. And you're now going to see that you can actually go to those classes. These classes are live, but they are also recorded as well. Always remember that. And we call those on-demand webcasts. Those are recorded, okay? And we can see those. Now, the last thing I want to kind of make mention of is if you said, James, we know you're teaching actually live online, but can you, for example, let's say, see this in person? Now, I want to kind of give you a quick heads up because there was a lot of events that were posted. So number one, we're going to be in Houston next Thursday. These are free if you're a Schwab client. We're going to be in Houston, Texas. Let me send this page out. Make sure you're 100% aware. Now, the biggest actually thing is if you go to that page, Houston, Texas, we're going to be right before Christmas, Miami. Okay, for that's the advanced option class. We're going to be in Dallas, Texas. First day technical analysis class, second day option strategies. We're going to be up in Seattle, north of Seattle, Bellevue. Okay, Sacramento, Sacktown. We're going to be in San Diego, one-day event. Atlanta, hot Atlanta, in other words, in March. Denver in late March. And also one I want to kind of make mention of for the East Coast people, you're going to see in Boston. Okay, the Patriots are hot this year. What the heck has happened to the Patriots? You're going to see that we're going to be in the 17th and 18th there as well. Now, you could join us, okay? Just click on that more information there, learn more. You could actually sign up and register for that. So I want to make sure you're aware of that. So as you come to this class, you realize, wow, these are live classes. They're live. I can ask questions. They're recorded. And also, there's also in-person events. Meet other like-minded investors like myself. I'm out of my time here today, but join us not just for this next class, but join us on a weekly basis. Very important that you actually join us. That way you can actually get more and more practice through time. We talked about a stock trade and also 2 option trades as well. Remember, with what we discussed, it was done for example, illustrative purposes only. Thank you. There's a survey in the chat. Click on that. Just 2 simple questions, okay? Thank you in advance for filling that out. Stay tuned for Cameron May coming up next, and this has been the class on Investing Master Series. And we did 3 sample trades today, and we'll follow on those throughout the week. Thanks so much. Take care. Bye-bye.